What if I told you XRP could pay your bills for life? At today's price, near $3, most people think retirement is a decade away. But once you combine real catalysts like ETFs, and live EVM sidechain, and a dollar stablecoin from Ripple with a clean profit-taking plan, the math changes fast. Hi, I'm Grace from Coin Theory. We're a team of seasoned traders, not to give financial advice, but here to give it to you bold and straight. Let's get into it. XRP had a year of big wins. The SEC case is behind it, US futures ETFs are live, Canada already lists a spot ETF, and a US one is under review. Ripple also launched RLUSD and gained key licensing in Dubai. The question now, if XRP is stronger than ever, how far can your stack take you toward retirement? First, what does retire really mean? Not endless luxury, but freedom. We're talking about $120,000 US a year, so you can live well, help your family, and choose work you enjoy. The simplest way is a pot that throws off 4 to 6% a year from low risk yield, like a short-term US Treasury exposure currently around the low 4% range. In crypto, tokenized T-bills from reputable providers are bringing that yield on-chain too. Now, map that to XRP. If your long-term freedom number is $1 million invested at 5% to throw off roughly $50,000 and you cover the remainder with other income, you can work the scenarios. If XRP trades at $100 one day, 10,000 XRP equals $1 million. If XRP trades at $1,000, 1,000 XRP equals $1 million. If XRP ever reached $10,000, 100 XRP equals $1 million. These are price scenarios, not promises. The point is how few tokens you need at higher prices. Here's how I think about building toward retirement with XRP without gambling the future. Step 1. Build up a main XRP stash that I plan to keep through market ups and downs. I do this by buying small amounts over time and adding more when prices drop. The idea is to hold steady for the big long-term drivers, things like ETFs, the EVM sidechain, and the end of the SEC case, and the launch of the RLUSD. Step 2. Take profits when the price is strong. For example, look at the weekly chart and mark the old high around the mid $3 range. Then plan to sell parts of your stack as price moves above that level. Put some of the money into safer, steady options like short-term treasuries that pay about 4% while keeping some cash aside for flexibility. Step 3. Hedge the journey. I keep a slice in Bitcoin and Ethereum as a macro hedge on crypto beta, and I hold some stablecoin yield. If I want protection into big events, I can reduce exposure or use inverse instruments. The point is to avoid being 100% dependent on one narrative. And by the way, if you guys are interested, the exchange that I'm using is Blowfin. You can get free XRP rewards just by trading on their platform, so it's pretty good. Just click the link in my description below, sign up, deposit, and start trading, and that's it. Super easy and convenient. So check that out if you will. Let me walk you through what I look for here. First, I want to see price close and stay above the old cycle region. Then I check momentum. If the MACD crosses above 0 and keeps growing, that tells me strength is building. If the RSI stays above 50 when price dips, that's a good sign. The bull trend is still healthy. These are not predictions, just tools to keep me honest when the chart changes. Now, let's map the path to that freedom number. If price climbs steadily, the next step is to see if it can retest the old highs. From there, Fibonacci levels show possible zones where I take profits bit by bit. The whole idea is to turn digital gains into a steady cash flow, not wait forever on one magic number. Retirement with XRP is not about diamond handing 50,000 coins until some mythical number prints. It is about combining real catalysts with a disciplined plan. The US case is closed, futures ETFs exist, a spot ETF trades in Canada, the EVM sidechain is live, RLUSD is growing, and Dubai has granted Ripple a license. If the US spot ETF arrives next, utility and regulated access can overlap in a powerful way. Pair that with a rules-based profit ladder and a low-risk yield for cash flow, and a surprisingly modest stack can cover a very real lifestyle. So, what do you think? Let us know your thoughts in the comments down below. And remember, I am not a financial advisor, just your crypto bestie who loves talking about crypto news. See you soon!